Hey everyone, welcome back to Corporate Decoder. Today's bet just filed its quarterly report and I'm seeing a massive shift in their business that you need to understand. Quick note, this is not financial advice, just my take on public filings for educational purposes. They are moving hard into Ethereum and it is showing up everywhere in their financials, but there are some major risks to watch. So this is Sharplink Incorporated and they've just released their report for the quarter ending the 30th of June 2026. Now, a few years ago, this company was focused on sports betting and online casino marketing, but they've made a huge pivot. Starting around June 2025, they decided to make Ethereum, or ETH, their main treasury asset. Think of it like a company deciding to hold gold instead of just cash. They believe ETH is the future of digital money and finance. Let's dive into the numbers. On the 30th of June 2026, their total assets were about $1.4 billion. That sounds like a lot, but look at the crypto assets. They had $988 million worth of ETH at fair value and another $369 million worth at cost. That is over $1.3 billion tied up in ETH and related crypto. Now compare that to the 31st of December 2025, when their crypto assets were a massive $2.4 billion. So they've seen a significant drop in the value of their crypto holdings, which makes sense given ETH's price movements. On the flip side, their cash is up to $56 million, which is good, but it is a tiny fraction of their total assets. Now let's look at how they're making or losing money. For the 3 months ending the 30th of June 2026, their total revenue was $11.5 million. This is up from just under $700,000 the year before. A huge jump, right? This massive increase comes from their staking revenue, which brought in over $11 million. This is from them staking their ETH. Basically lending it out to earn rewards, kind of like earning interest. However, their affiliate marketing revenue, their old business, is down significantly, dropping from $668,000 to $367,000. This shows the shift in their business model is really happening. But here's the scary part. They reported an unrealized loss on their crypto assets of over $321 million for just this quarter. This is because the price of ETH went down, and even though they haven't sold it, accounting rules require them to report that paper loss. This led to a massive operating loss of over $393 million for the quarter. Looking at the first 6 months of 2026, their total revenue was $23.5 million, mostly from staking. But again, the unrealized losses on crypto assets are staggering at over $827 million. This means the company is burning through cash, even though they are generating some revenue from staking. Their total operating expenses for the 6 months were almost $287 million, and a huge chunk of that, $267 million, was impairment losses on their crypto assets. This is a big deal because it means they had to write down the value of some of their crypto holdings. Their net loss for the first 6 months of 2026 was over $1 billion. That is a tough number to look at. So, what does this really mean? Their revenue is exploding, but that is only because they are now earning from staking their ETH. The old affiliate marketing business is shrinking. The huge jump in operating expenses is largely driven by these crypto asset impairments and the costs of managing this new ETH strategy. The unrealized losses are the biggest story here. They highlight how volatile ETH is and how much it can impact the company's reported financials, even if they haven't sold anything. For the 3 months ending the 30th of June 2026, their net loss was almost $395 million. This is up dramatically from a loss of about $103 million the year before, and for the 6 months, the net loss is over $1 billion, a huge increase from about $104 million last year. This company is losing a lot of money on paper, mostly due to the price swings of ETH. Let's look at cash flow. For the first 6 months of 2026, they used over $17 million in cash for operations. This is compared to using just over $2 million in the prior year. They are burning through more cash to keep the lights on. In investing activities, they spent over $14 million in the first half of 2026, mostly buying crypto assets. This is way down from over $400 million they spent in the same period last year, suggesting they are slowing down their crypto purchases. Financing activities show they brought in $60 million in the first half of 2026. This came from selling shares, but it is a lot less than the $412 million they raised in the same period last year. It looks like they are raising less money and spending more cash. Now, their strategy is all about ETH. They talk about compounding ETH concentration, which basically means they want to hold more ETH per S-hair over time. They are doing this through native staking, where they stake ETH directly, and liquid staking and restaking, where they use protocols like LSF and WETH. They even entered into a big partnership agreement with companies like Ether. Fi and Consensus to put a lot of ETH onto a network called Linear. The goal is to earn yield and hopefully see ETH's price go up, but there are huge risks. They explicitly state that ETH has been highly volatile and could go down dramatically. They also mention that their ETH holdings are less liquid than cash, meaning they can't easily sell them if they need money quickly. And the regulatory landscape for digital assets is still very uncertain, with agencies like the sexy FTC making new rules. They are worried that if ETH is ever classified as a security, it could create massive problems for them. Plus, they are using decentralized finance protocols, which are new and risky. Smart contract errors or hacks could lead to losing all their ETH. They are trying to be transparent by sharing information on their website and social media. It is clear they want investors to know what they're doing with this ETH strategy. Let's look at the revenue breakdown for the 3 months ending the 30th of June 2026. Staking revenue was $11.1 million, but importantly, there were significant fees paid to third parties for managing their assets, about $772,000 for asset managers and $299,000 for custodians. These fees eat into their profits. As of the 30th of June 2026, they held about 632,000 ETH at fair value, and over 229,000 units of LSE ETH and WETH at cost. This is a massive amount of crypto. Looking at the revenue growth, it is incredible, going from 697,000 to over $11 million. But remember, this is driven by staking rewards. However, their selling, general, and administrative expenses have exploded from $2.3 million to over $9 million. This is because they are building out the team and infrastructure for this new ETH. Focus Business, the company is in a critical transition period. They've got this massive ETH treasury and they are generating revenue from it, which is a big step. But the unrealized losses from ETH price drops are enormous and the operating costs are soaring. They are essentially betting the farm on ETH. And if ETH prices fall significantly, it could be really bad. On the other hand, if ETH prices rise and their staking strategy works well, they could see substantial gains. It's a high risk, high reward situation. The biggest risk I am watching is how volatile ETH is and the uncertain regulatory future for crypto. What I am actually looking for is proof that they can manage these risks and actually profit from their ETH holdings rather than just holding them. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Check out the Discord in the description.